Welcome, everybody. I'm Julie Shepard, and I'm the director of MilSpouseFest. And if you are here in the right place for Unite and Ignite, our March MSF Cast on military tax tips. I'm going to be your host today. And in the meantime, I'm going to do a little screen share, and then I'm going to introduce our speakers. But first, I'm going to start with USAA and JJ Montanaro, and who's helped me put this fantastic event together today. So JJ?
Hey, thanks, Julie. Great to be here. It's tax time, or maybe for a lot of you, tax time has passed, but we are talking taxes today, and hopefully this will be recorded if all goes well on the technical side. You'll be able to look at this, but I'm really excited not just to be here, but really more excited to bring a couple folks from our enterprise advice group, friends of mine, but also very knowledgeable. And I'm going to give them a little prop, or if you want to see the work that they're doing, because they probably won't do this and self-promote themselves. But if you go to usa.com/advice, that'll get you to the USA Advice Center. So a lot of Josh and Robert, the things that they do are there, the articles that are focused on military life, on taxes and retirement. So again, excited to be here and share the spotlight. Although they're not glowing as well as I am with the sun coming in on my head, but they're going to do a great job today. So thanks, Julie.
Thank you, JJ. All right, I'm going to do my screen share now. Share and get some of this other junk off of my screen. I think I picked the wrong window to share. Let's try this again. Sorry. Like, of course, I tested it out before we
It's not real. It's got to be glitches.
That's just the way things go sometimes. We just got to roll with it, right? All right, exactly. Let's try that again. Okay, there we go. Even the glasses weren't quite. What are you guys seeing?
We just said we see that you are getting ready to start sharing your screen, but we don't actually see your screen.
Okay. What about now?
Now we see MSF Cast.
Okay, there we go. So we have a fantastic team member, Mary Montoya, who does all of our graphics. So I don't want to take full credit for that. for that. So anyway, on to our introductions here. We're joined with a fantastic panel today. And thank you, Josh and Robert, for joining us. So we really wanted to make sure that we brought experts to you guys to really be able to communicate the right messaging. So we'll just kick it off here with our first of all of our questions, and I'm going to do the spotlight on Josh and Robert here. So where do you guys want to start? You want to talk about what kind of help you have that's available for free resources?
Yeah, I mean, I think so. I'll let Robert talk about this a little bit, but I think one of the things you'll probably hear us say often today is that, hey, we didn't stay at the Holiday Inn Express last night, and we're not accountants. So if you need tax or legal advice, there are resources out there for you, and we want to make sure that you understand that. So I think. That's a disclaimer that really should follow about everything we say today, is that there are experts out there, and that's what they do. So I think we understand the concepts, and we're going to give you some great tips and information. But essentially, hey, if you need tax advice, you need legal advice, seek it from a professional.
That is a good disclaimer. That is a good disclaimer, JJ.
See, exactly.
So what I'll say is that I have a who I deem my tax professional on speed dial, and that's actually Robert, because I was doing my son's taxes about a month ago, and I had a question, so I called Robert up on a Saturday. But y'all don't have Robert's phone number, and I'm not gonna give it to you. So where can you find some help in the military? So if you go to Military One Source, there's actually two really good resources: MilTax, which is a partnership with H&R Block, and VITA, which is the Volunteer Income Tax Assistance through the Armed Forces Council. And so if you go to Military One Source and just type in MilTax or VITA, you're going to get the information, and you're going to be able to get help. Also, don't forget, there's IRS Free File if you below a certain income limits. And then also companies like to support the military. And so a lot of times like TurboTax or different tax software, they'll have either free or discounted versions of it available to members of the military. So if you're ever sitting there thinking, I don't know what to do, I don't know where to go, Military One Source, IRS Free File, and then also look at different companies that you work with, and then ask the questions. I know USAA has a partnership with TurboTax, and other companies have partnerships with different software. So there is tax available. So don't sit there and be frustrated. Seek the help, because there's people wanting to help you out.
Yeah, I would add to that, Josh, and I appreciate the plug for my great tax advice, but that comes more from practice with my own children versus any type of formal education. I have two sons, and one of them in particular is a handful, and he has about 5 or 6 jobs during the year. He's kind of part of the gig economy, has some W-2 income, 1099 income. It's all over the place, and so I think he makes what would be the equivalent of minimum wage for about 20 hours a week for total income, but his taxes take me about 20 hours to complete each year. So I get lot to practice, and great kid, but many of you out there probably know what I'm talking about. You know what, Josh mentioned a couple of good sources, and I'm just a big, I'm a Googler. Man, I just have a question, I Google it, but the IRS has some really good resources that Josh just mentioned, but a couple of key terms that that you might look for is one in particular that I've refer people to is how to choose a tax preparer, and that's on the IRS site. So if you just choose a tax preparer, they have some great information there as far as registered agents versus a CPA, an accountant, and things like that. And then there's another one, do you need someone to prepare your tax return? And that kind of, I think, links you to the VITA and some of the other resources. And then, the IRS file a return help talks about is the guide for, I think, some of the various services that are out there as well. And there's one that's not in the IRS site, but I ran across this. That's really good for anybody. Is the American Bar Association State Tax Guide, and I may refer to that again later. But it's you could Google ABA State Tax Guide 2021, but it's a table of all the different states and the tax code, what applies, and there's a lot of information in there for the military. So if you if you hit Alabama, it's on the index, it's going to go straight to the tax guide, tell you what is taxable, what isn't taxable. So that's a great resource as well.
I've got to say, so if you're looking at the IRS website, the publication, I think was it the Armed Forces Tax Guide, publication 3, I think.
3, yeah.
Yeah, that's a fantastic website to walk you through some of the things that are available, especially relative to filing deadlines, what happens if we're deployed, all the various nuances of military life. A lot of them at least are captured in there. And I think whenever you have a big change, there's a lot of, we've talked here at MilSpouseFest, Julie, about business ownership and the beauty of being able to have that travel with you as you PCS from location to location. If you're just launching that off or starting that, sometimes we don't know what we don't know. And so that can be a great time to go to one of these resources, get the help, and again, probably identify some opportunities there to save some money that maybe you hadn't considered.
Yeah, that's a great tip about that. I was an independent business owner for a number of years before I found myself here. But Robert, I wanted to circle back to something that you brought up because you were talking about children. And now you're not military, so it's a little bit different. But I wanted to ask you, because several of us who are still active duty families have dependent children who have jobs. They may be moving. So can you touch on, are these free resources for filing taxes available to dependent children, or is that only for the service member?
Well, I think a lot of it is Julie, good question. And I don't know the definitive answer. I'll take a stab at it, but I think it's if it's income dependent, like a lot of these free resources, free file, again, my sons, sometimes they're dependents of me, sometimes they aren't. I think the earned income limit this year is a little over $4,000. So if they make over that, then you can't claim them as a child or a family dependent. But in that case, they can use a lot of the free file. I think a lot of the income limits, depending on the source, or I think they hover around, if you make less than $40,000, you can use the free file services that are available on the IRS side.
Because guess what we're doing this weekend, Robert? We're doing the 19-year-old taxes. So, I mean, I'm getting my own self-help here, but I mean, I make tongue in cheek, but I'm not the only one in that situation. And so, it's $4,000 if they earn.
It's a little bit over that, Julie, but that's kind of the first, first stop is, have they made more than that in earned income? Unearned income is a different situation. That has a lot to do with, it's a different, more complicated story, has to do, you get into the kiddie tax and all that stuff. But, jumping back to something that JJ covered or talked about was, if on the IRS side, I think one of the best listings is just under tax information for members of the military. And then that segues into current and former military, combat service and disabled veterans, and all the little links that you have there. So tax information for members of the military, to me, is, at least on the IRS side, is the place to start.
Awesome. That's what happens when you try to turn on the do not disturb and you hit the wrong button on your Apple Watch. So not to break the theme here, but I promised the community that they would get merch codes from our merch store if they logged in on time. So if you allow me a personal privilege here to read our winners off, Dallas Olson and Sharon Ramp. So you were ready and on time, and we will send you a code so either you can use the code for t-shirts or whatever in our merch store. So thanks.
Those t-shirts are very popular at my house, among my three girls, or not even in my house, beyond my house. We have.
Those are, you mean the Unite and Ignite ones? These are different.
Yeah. Okay.
Ones. These, there's.
I love taxes. They say I love taxes.
No, I don't know. Does anyone really want to say that they love taxes? I don't know. I like getting my refund money back. Not sure that that's going to happen this year, though. So I've been waiting for that corrected W-2 in order to get going on ours, but I may not. I may be waiting until I have a lot more gray hairs. So we may just have to file an amended return. But I'm going to let you get back to our talking about our resources, and then maybe you did want to touch a little bit more on military spouses and entrepreneurship and what free resources are available to them to learn more, because I know that's a large segment.
Yeah, I think as we were getting ready for this, one of the things we talked about was sometimes the confusion around military spouses, and you asked, I think specifically, Julie, about the Military Spouse Residency Relief Act.
Yep.
I don't know Josh, if you wanted to lead us off on that topic, or Robert.
So actually, Robert was going to lead us off that one, but I can say, just from personal experience, my wife definitely took advantage of that Relief Act. So from personal experience, we took advantage of it. So, but Robert was going to lead us in that discussion.
Gosh, I know enough about it just to be dangerous, Julie. When you mentioned it, it was the first time. I mean, I've probably seen it, but I haven't really delved into it, not having experienced it. And, I just want to tell the folks out there that, really, it's true. You really learn taxes by doing it yourself. And so, when you talk to somebody, if you talk to me, you should take it with a grain of salt since I haven't experienced what you've done. So always, I think your own experience is the best teacher in this. So please take everything I say with a grain of salt. But, from what I understand about the Military Spouse Resident Relief Act, or MSRRA, is, if you think about it, I always, when there's taxes, and I teach some stuff about taxes at the university, but a lot of it is I try to tell my students, go back and think about what's going on, really. What you got the IRS, who has to raise revenue, right? And they want to be sensitive to what's going on in society and special situations. So IRS wants to do their job, raise revenue, which is through taxes for income. And then you have specials, and then you have people moving around, whether you're in the military or not. And so you have this issue of residency. Where do you really live and where did you earn your money? And in the military, of course, you have your convoluted rules as far as, what your, where your residency is, and then, what was your home record, which I think is probably causes some confusion as well. But, the home record is, I guess, where you enter the service, and where you consider your residency is really what's your permanent home. And so for somebody who their permanent home is in Texas, which fortunately does not have a state income tax, that can be a big plus to be able to carry with you if you move someplace else. So not the IRS, but probably the military community, through discussion said, hey, it's not fair that a military spouse who maybe was a resident of Texas moves to California, where there is a tax with their spouse, and then earns income and then has to pay California state income tax. And so this portability is kind of okay, let's make it fair for military spouses not to be dinged because they're following their duty, doing their service to the country by following their spouse, and we don't want them to have the burden of having to pay taxes. So, that's the way I understand the gist of it. And again, that ABA guide, American Bar Association guide, has state-specific information. And I think maybe Josh wants to pick up on this, but I think there's some other, issues when you look at the state level as far as what other type of income might be not be included under the act.
Yeah, and it does come down to state specifics, but there's a reason most members of the military are from Texas, Florida, and Nevada, right? If you go on any military base and you look at the license plates, 90% of them will be from Texas, Florida, or Nevada. Reason is no state income tax.
Also
right?
Washington State, right?
Oh, okay. I haven't seen Washington State one.
Yeah.
That was me, baby. I was Washington.
Yeah, Washington
there you
State
go.
also doesn't have it. I will say
Tennessee
though,
doesn't. Yeah, there's a few others. Those big
Virginia
ones.
is like second or third in the nation for number of military, actually, and there is state tax here. I'm just gonna throw that out there as a Virginia resident. But they are up. Seriously, they are up on the.
You've got some great property tax on your vehicles too in Virginia, don't you?
Yeah.
Actually, the non-state tax states are out: Alaska, Florida, Nevada, South Dakota, Tennessee, Texas, Washington, and Wyoming as of 2021. So there's nine states that don't have a state income tax.
And so that's why you see a lot of those coming from those places, right? And I contrast this with the NBA, right? I once heard an NBA player talk about the importance of their tax professional, because they play games, right? They may be in 3 different states at 3 different nights, and the income they earn for that game is taxed by that state. So they actually have to file state income taxes in like 30 or 35 different states, depending on which side they're in and where they're playing, and maybe even overseas, right? And how that works. And so their tax situation is very, very, very complicated. Well, the Relief Act helps not put that complication on military spouses. And that's huge, right? They get to carry it with them, and they get to take advantage of it. So you don't have, the military member can be a resident of Texas, but then this military spouse has to keep their home record, which may be New York, and then has to file everything via remotely, and just makes it difficult. So it's a very good thing to take advantage of.
Josh, you said home of record. I'll correct you, state of residence.
Sorry, state of residence. Thank you.
Yeah, I was going to say.
So Evelyn asked a question here. She's like, can we type in the chat what the no state taxes are? So I just want to we can get the list to you, Evelyn. I just going to put this on record though, that the service member has to be the member of that state in order for you to use that as the spouse. Yes. So it doesn't work or if you've not lived there or been stationed there, you just can't say, we're going to sign up and be Texas
Yeah.
residents or Florida residents. There's
You-
requirements of that. So
So they call it, I mean, if you look at it technically domicile, so that's where your home is, if you will. And how do you establish that? Well, it varies from state to state, but could be getting a driver's license. It could be where you register the boat. But I think I would say in terms of that, if I were to distill it down like I tend to do in a very simple way, which is probably oversimplifying, it's just the idea that, hey, if you're PCS'd to a location, you're not going to pay state income tax there because you were PCS'd and are with your spouse at that location solely. So you can take the domicile or that state of legal residence for tax purposes of your spouse without ever having lived there. That was one of the aspects of this. But you can also keep your own, even if it's not the same. But in order for this to work, you have to be co-located with your spouse in that state. So, but it's,
So
another way of distilling it too is just think in terms of if you are a resident of Alaska, Florida, Nevada, South Dakota, Tennessee, Texas, Washington, and Wyoming, one of those 9, you have an opportunity. If not, don't worry about it.
Well, and Evelyn, I saw your note in the chat about when you're retiring. I'm actually going to hit that here in a little bit on the importance of that decision as you transition out of the military. So I saw it in there, just let you know I'm going to be answering that here in just a little bit, because it's a very important conversation to have and a very important piece of your decision making.
and this whole discussion around and around is just another example of why, hey, if this is confusing, well, then go to legal assistance, talk to somebody and with the VIA program or what have you, and get the help. So if we've confused you, which is very possible, just realize that there's help out there.
So sorry, Robert.
I was going to interject one thing that, since we're talking about confusion, and I've worked with enough people with taxes that to see that confusion is one thing is don't feel like you've got to get everything just totally perfect or you're going to go to jail. I mean, I don't work for the IRS. I have family members who do, but we don't talk, but it's, you do your best on these things, but we'll talk about it maybe towards the end is good record keeping and justification for why you made this decision and writing everything down and keeping a record of that. And I mean, I do that every year. Why did I make this decision? Why did I select this? I keep my notes so I can remind myself, but also if I were audited, that I have something, a little bit of a trail that I did my best, to make this decision based on what I knew at the time. And so I'm not saying that's a get out of jail card, but at least it's, I think when you're dealing with these situations, it's really hard to get it perfect. And maybe there isn't a perfect when it comes to taxes.
I think those are great tips. I just wanted to share like my little personal, like how it works for me, because sometimes that storytelling helps people like relate. So we're Virginia residents, which, we pay extra personal property tax, but that's where we're from. And then when I moved to San Diego with my service member in 2017, I did run my own business there. So I got my 1099 and I then filed taxes back to Virginia. So California makes, they want to make sure that you're doing the right thing, and they do check up on you with that. But that's how that worked for my family. And if you work somewhere that they still are taking taxes out where you live and that's not your home of record, you can still get that money back if your service member is in another state. Some employers are not able to do that for whatever reason. I don't understand the reasons why, but yeah, you can just go to those resources and ask for those free. That's something that gets asked a lot of spouses who move and their employers are still taking out tax even though they're not resident.
They're withholding tax for the state you happen to be working in.
Right.
Exactly.
Yeah.
Thanks for correcting my terms. I'm not a tax professional, but
But you
I
did
like,
stay at the Holiday Inn. No.
I did stay in a Holiday Inn Express. No, Embassy Suites was the last place I stayed, which is where our next event is going to be.
Can't wait for that. That's cool.
Nice.
All right. So what do we have next up, Julie?
All right, let me go back to my slides. Let's see what we've got here.
I think we
Okay. Why does it keep defaulting to that? Sorry. Okay. Save with an eye on taxes. So you want to share what you mean about that?
That was actually, yeah, that was my point. So when you talk about top tips, or one of the, if I were to make it into a question that I get probably asked more often than any other when it comes to how you save and invest, it's, hey, what should I do, Roth or traditional? Whether I'm talking about IRAs or the TSP. My thought here was just to be cognizant of what you're doing and what the implications are when it comes to how you save and invest, whether if that's in a 401k at your employer, or if that's the thrift savings plan through your military members TSP account, or whether that's an IRA. Obviously, the answer to that question, like so many things in this financial planning tax world, is going to change over time. What makes the most sense now? But it's I think imperative to understand that, okay, if I'm doing a traditional, let's say in a 401k or the TSP, then that's going to reduce the income tax I'm paying today. Is there a cost? Well, on the back end, there's a cost, because when I use that money in the future in retirement, let's say in an ideal world, age 59 and a half or later, typically, I'm going to pay income tax on both the what I put in, because I didn't pay it up front, and the earnings over the years. And so on the other hand, with the Roth, you're not going to pay the taxes. You are going to pay taxes today, likely, but you're not going to pay it on the back end. And so nobody can really tell you definitively which one of those is better, because we don't know exactly what's going to happen in the future with your taxes. But I do know that if you use traditional type plans and you get that tax deduction today, or you don't pay the taxes today, ultimately the IRS has got a little bit of a lien on part of your savings. And so if you do a Roth or a Roth TSP, if you're eligible for the Roth IRA, then ultimately you own all of that when you get into the retirement mode and start using it. And so whether that made more sense, has to do with the calculation of how much taxes you pay today versus how much taxes you pay when you use the money. But whether it's good, I will just tell you that if you get to retirement and you have a pool of income that's tax-free, it's going to be a good thing. So it's not going to be something you're going to nickel and dime whoever told you to do a Roth about. And frankly, I think if you use a Roth, you're essentially saving a little bit more, because like I just said, you own all of that money. So my point is not to give you an answer that works for everybody, but it's just the idea to consider this and have this be part of the calculus you do as you're trying to decide, okay, do we do the Roth TSP or the traditional TSP, or do I do a Roth IRA or traditional IRA? Because it's going to have big implications. And all of us have worked with people that have gotten to the end of the savings game, that stopped accumulating and they're starting to use that money, and really seen the pain and suffering, if you will, that comes from people that have done a great job saving, but they get to retirement, and gosh, if they want to buy a $15,000 cruise vacation for their extended family, they've got to pull $22,000 out to make it happen, because it's all taxable income. So that's really my call to action, if you will. It's just to be cognizant of those rules. And that's why we talk about tax diversification a lot, just the idea of using different types of retirement accounts, because it's going to give you flexibility and options down the road.
So we've got Nikki, who says that she's doing a mixture of both Roth and regular TSP.
Yeah, and that's a great example of what we just talked about, because you don't know, so why not try different things?
I think JJ hit the nail on the head when he said, it's really more important just to be saving. So I'd say to anybody that's contributing, to TSP or other vehicles, kudos. I mean, that's really the name of the game. Predicting what taxes are going to do is really tough. There's some rules of thumb that, generally, if you're going to be in a tax lower tax bracket, in retirement, then maybe traditional contributions, are better. Most people don't know that, especially when you're younger. That's really hard to predict. Some of the rules of thumb are the longer your time horizon, the younger you are, the more sense a Roth makes. And then also how you invest, the more aggressive you are with, with your investments. We're not here to talk about that, but, if you're very conservative, if you think about it, if you're very conservative, with your investments, or you're not earning much, the earnings part really doesn't make, that's the big factor when you make when you have that deferral and the ability to come out tax-free. So if you're not using that lever, then it doesn't get you much, in the future, if you have just a Roth and you're just putting it like earning 1%. So, those are kind of some of the things, but the younger you are, I think, and the more risk tolerant you are, then, the Roth makes a lot of sense.
I liked how you threaded that needle, because I didn't realize that about the risk tolerance in relationship to, everyone told me when I was younger, we had our investment accounts before there was a Roth. So, and now you know how old I am. But which is why we have both, not because we were trying to play that game. But yeah, both my husband and I are very different in our risk tolerances. He's way more conservative, and should not be a surprise to you, JJ, that I have a super high risk tolerance. So then you're saying that was the Roth is a good choice for me. So thank you for validating that.
Well, and one thing I will say, right, let's probably take that a little bit beyond just your risk tolerance, because he's thinking about growth in the account,
yeah,
right? The larger percentage that earnings make up the account, then the Roth probably makes more sense, because you're not paying taxes on those earnings, right? You can be very risky and put your entire investment into some obscure penny stock and lose it all, right? And then obviously there's no taxes to pay, because there's nothing that you
no money left.
earn. There's no money left, right?
I'm not
really looking at
that.
Yeah, really looking at that growth. And another, kind of another plug for Advice Center. It's funny you brought this up, JJ, because in about a month and a half, 2 months, I'm actually going to be publishing an article that says, what's the difference between a traditional and a Roth IRA? And we're actually going through every single scenario both you and Robert mentioned, right? What if we retired a lower tax? What if we retired a higher tax? What if I'm younger and I have more growth in the account? Which one makes sense? And we break it down, those 3 scenarios, to help you make a decision, right? To understand, you never know for sure, but knowing what the differences are and what the implications could be kind of help guide your decision.
I think the other thing I just thought about that we haven't talked about yet is the idea of, hey, what about the money outside of these retirement plans, Roth versus traditional, and being cognizant of what you select there, because a lot of times, and Robert, I'll let you comment on this, but a lot of times people will look at things like exchange traded funds because they're fairly tax efficient, or to your point, if you're investing in bonds, which are more conservative, well, maybe you should be looking at tax exempt bonds. Again, depending on where you're at in life, there's a lot of different variables there. But again, the implications of how you select specific types of investments outside of those retirement plans can also play a big role in what you pay in terms of taxes.
Yeah, the tax code for investments, or any, and not just investments, but for business, and it is really, is it advantageous for people that earn their taxed at capital gains rate? That's why we talk about, the super wealthy don't, pay no income tax. It's not necessarily true, but they're probably getting taxed at capital gains rate, which is much lower. Or, they have, I used to have clients that were just, all they had were municipal bonds. And so they paid no, income tax, federal or state income tax in some cases on the earnings from the or the interest from the municipal bonds. So, these vehicles aren't available to all of us, but I think being conscientious about how it's taxed. And so, there are schools of thought that say, again, if you're for your capital gains type of stuff that are more aggressive like stock-based types of investments, then perhaps you want to get that capital gains treatment, which is maybe outside of a traditional IRA, as such. Doesn't really matter with the Roth or Roth account, because you're getting taxed on the contribution as it goes in. It's all going to come out tax-free at the end. But if you have some traditional, if you're doing just traditional and don't have a Roth or don't qualify for a Roth, then maybe with your outside money you take a little bit more of an aggressive stance.
So I've got one question that I wanted to ask about what you just said, Robert, and then I know like we're about halfway, so I want to make sure that we move on to our next topic. But you said whether you qualify for a Roth or not, and I know that there's income qualifications for the IRA side, but is there a qualification for the TSP? I thought anybody could do the Roth TSP.
Yes, yeah, there's no income qualification for the Roth TSP.
Okay.
As long as you're eligible for it, you can contribute.
That's why I just wanted to confirm that.
Yeah.
There were two different things. So the next bullet that you guys had put up with, you wanted to talk about what the tax advantages are of military service. And like, spoiler alert, one of them, and we're benefiting from right now, is the tax-free income when you're in a combat zone. So
there you go.
My favorite one, but I'm going to turn that over to you guys now.
All right, so there's a few really important ones, right, to be aware of. And one of them, I'm going to try to use it to transition to Evelyn's question about where to live after the military, right? So the first one that Julie mentioned is tax-free combat pay. That's huge, right? And it's important to note, you don't actually have to be in the combat zone. You can even be in direct support of the combat zone. The key is you have to be receiving hostile fire or imminent danger pay. And Congress sets up what they consider combat zones so that the IRS knows how to treat income. And another advantage is if you're in a combat zone on tax filing day, you get an automatic extension of filing your taxes, right? It's very hard to file your taxes when you're at some fob in the middle of Afghanistan getting shot at. Now, let's just be honest. So the extension is 180 days plus however many days you were in country before tax filing day. The key is you have to be in country on tax filing day. Let's say if it's April 15th and you show up April 16th, you don't qualify for that extension because guess what? Your taxes should have already been filed, right? It's should have already been done. The IRS form is IRS form 4868. So you have to tell them that you want to have this automatic extension, but it's automatically granted. So that's really important to note. The second thing is specifically for our members of the National Guard and Reserves. If you drill more than 100 miles away from your home, you're eligible to deduct unreimbursed travel expenses, right? So if you have travel expenses that are not reimbursed, eligible to deduct those, but the key is 100 miles, and that's where it's talking with a tax professional. The third thing I want us to talk about is the 2 and 5 versus 2 and 15 rule for home sale. That was actually the first question actually came up before we started. So let's explain that one. Military members often own a home when they move somewhere, right? They PCS. Well, when you sell a home, you have to pay capital gains tax on it if there's a profit. But the IRS has a rule that if you've lived in the home 2 out of the last 5 years, you don't have to pay the capital gains tax, right? But a lot of times for military members who deploy or PCS, that 2 years out of 5 can be difficult to hit. So they give you an extra 10 years. They give you the 2 and 15. You have to live in the home 2 out of the last 15 years, and you can exclude the capital gains tax on any profit. Now, it gets tricky. What if my personal example, I lived in the home, then I rented the home out and I sold it while it was a rental home? What if I'm in the home, I rent the home out, then I PCS back to that location and I move back into the home and then I sell it, right? Those type of situations can get very complicated. And that's why we go back to JJ's original thought of, in some of those more complex situations, seek out a tax professional who can really help you answer that question. Because when it becomes rural property, it's essentially a business, right? Profit, loss, you can deduct, maintenance and things like that. So really understand your particular situation to see if you meet, because you don't want to pay any less tax than you're supposed to. Otherwise, you go to jail, but you don't want to pay any more than you have to, because then you're impacting other financial goals. And then the last thing I want to talk about, and this gets to Evelyn's, and this is where JJ and Robert, I really want y'all to come in, is understanding the tax benefits of the military pay system and how it's different than the civilian. So we all know BAH, BAS, overseas COLA, and I say overseas COLA is not taxed. If you're getting a CONUS COLA, like right now, if you live in New York City, you get a 6% cost of living adjustment. That's actually taxed in the United States. Outside the United States, it's not. So what that means is for the same salary as military versus civilian, you're going to have more take-home pay as a military member, simply due to taxes. And we're not counting, you know, TRICARE being free and all that other stuff you have to do on the civilian side. So you have more take-home pay, which means you should have more freed up income in order to achieve your financial goals. But Evelyn, your question on, does that make a difference where I live after I leave the military? The answer is yes. Okay, so we talked about the 9 tax-free income states. Your goal when you leave the military is probably to maintain your standard of living. Okay, and I actually ran an example. You not only take taxes into account, but you also need to take cost of living. So here's an example. So let's say you're an E7 retiring at 20 years in San Antonio, Texas today, and you have jobs offered to you in Tupelo, San Antonio, Tupelo, Mississippi, staying in San Antonio, and Honolulu, Hawaii. Okay. If you decide to take the job in Tupelo, Mississippi, that job needs to pay $5,559 less than what you're making in San Antonio to maintain the same standard of living. If you stay in San Antonio, that job needs to pay you $4,300 more than what you're making in military to maintain the same standard of living, right? So if your civilian job and you stay in San Antonio pays you the same as military, your standard of living is going to go down because of those taxes, right? And because of things like now having to pay for healthcare and different things like that. If you move to Honolulu, Hawaii, JJ, what do you think the difference is there?
In terms of percentage?
Moving to Hawaii versus San Antonio, Texas.
I'd say it's got to be 50% higher.
Okay.
30%.
30%.
I was going with 25, so.
So you got to make $115,000 more to maintain the same standard of living in Honolulu, Hawaii. And this is based off an $80,000 salary.
I was typing, Josh. I was in there typing, so I wasn't paying attention. I was telling people, hey, you can go to the USA.com/leaving the military, USA.com/your military life. And there's a calculator that's doing, we'll walk you right through what you're doing.
I use this calculator to get those numbers. And that's one thing I did not understand when I left active duty, is just how much the cost of living in different locations impacts your standard of living, because the military changes it for us, right? If we move from Mississippi to Hawaii, they're going to like triple our BAH to make up the difference. If they move you to New York City, they're going to give you that 6% cost of living adjustment so that you maintain the standard of living. It's not like that on the outside. So that tool enables you to say, here's where I'm at, here's where I'm thinking about moving. What do I need to make to maintain the same standard of living? And that really helps you compare jobs, because not only do you have to take in, now I have to pay for my health care and pay for different things like that. If you're moving to one of those high income tax states, now you're going to be paying income tax because you don't have your residency anymore, your domicile. You have to domicile where you're at. You got to become a resident of that state, start paying their taxes, start voting there. And that can really impact your decision between jobs. So I would say those are the big 4 things to understand of the tax advantages and the tax things to understand for the military lifestyle. But the Hawaii one is actually a surprise. I knew it was more expensive. I didn't realize just how much more expensive it was.
Have you been stationed there, Josh?
Hawaii, no, never have.
So our youngest was born there, so we were there for 2 years. So, but I think if I did my math right, you said 80,000 and you needed 15,000 more.
No, 115,000 more.
It's
Yeah.
like a 50% increase, yeah. So
Yeah,
Okay.
$115,000
I was
more. So it's
totally
actually what,
wrong.
135% increase.
so Josh, you're saying
$20,000 more.
that really the Riverwalk here in San Antonio is just as good as Waikiki, right?
It is. It is. Especially, you know, if someone is giving you a $90,000 job in Mississippi, Tupelo, or $100,000 job in Honolulu, that's kind of an easy decision at the very similar jobs. Your standard of living is going to be much higher in Tupelo than if you move out to Hawaii, simply due to taxes and the cost of living increase.
But this is what I was thinking. Now you tell me if you think this sounds crazy. You have your twilight tour in Hawaii, and then you get a civilian job there for just a couple of years, and you continue to stay in housing because they allow you to do that. And then you could still move back to the mainland because you can take your retirement move up to 3 years after, right? So you could live your dream for a couple of years.
For a couple of years, right? For a couple of years. So
I'm planning it out, man. I'm planning it out.
You know, seriously, my short story, my wife and I were in Hawaii flying back to San Antonio, and there was a young airman just enlisted, you know, that was on the plane, and he had a letter in his lap, and it was we didn't, you know, and we were talking to him. He said, well, my girlfriend told me not to open it till we take off. And so my wife and I kind of cringed because we kind of had a feeling what it was, and it was a Dear John letter. And, you know, so he started crying and everything. We thought, gosh, this poor guy. And plus he was moving from Hawaii to San Antonio, Texas to do his basic here in San Antonio. As luck would have it, we were on the Riverwalk like, you know, 5 months later. And we run into this guy, and he's got a young gal on each arm, you know, and we're like, how do you like life in San Antonio? He goes, man, it's great. It's fantastic. You know, so not just cost of living, you know, but you know, there's some other benefits as well like this sometimes.
So who wants to talk about all those letters that we've been getting? We got stimulus money. Some of us got advanced tax pay credits for children. What do we do with these? How does that work?
Yeah, I guess that's my job here is yeah, there, you know, we've had again, thinking high level, what's happened in the last 2 years, how it's affected everybody with the COVID situation. And it's been, I mean, I feel so bad for anybody that's been personally affected for financial reasons, but also just other health reasons and their families. I mean, it's been just an incredible journey and experience for all of us. And I don't think we're quite out of the woods, but you know, the government has tried to step in as best they could, you know, I guess in terms of economic relief for those who have been affected. So we've seen, you know, several rounds of what we call the EIC payments, or economic impact payments, or stimulus payments to people. And, you know, in the thing to keep in mind is these are all kind of prepaid tax credits. So it's not taxable income, but so it doesn't increase your tax bill. So that's the first thing to remember, because the word prepaid is in there. Prepaying a tax credit means it could affect your tax at some later date. You know, so you're going to do a tax return based on this, and you're going to factor in this prepaid credit. So we've had, you know, I guess over the last 2 years or so, we've had 3 rounds of this, and so the latest that people may be receiving is a letter 6475, I think is what it is, and you know, it's talking about the third economic payment and what you need to do in that case. The bottom line with all of these is if you can, is hopefully you've saved all these letters, especially as we go into tax filing for 2021. You know, what you may have received in the second or third round. But for those of you who don't have a good record on that, you can go to it's irs.gov online account, and you can see, you can log in and to access what your EIC payments have been, in case you've forgotten about that. So I would encourage everybody to, if you've kept good records, great, you know, And then if you're doing your taxes and you're utilizing any of the, the software, which a lot of us use, they're going to ask you about EIC payments. Did you receive a payment or not? If you didn't, then are you available for the for a rebate based on your, not receiving it, et cetera. But you can, if you don't know of the answer to that question that you'll encounter in the software is, I don't know if I received it or not, you can go to the irs.gov online account. And I think that's gov online, all one word.
And
Okay,
I can tell you what,
in the comments, because a lot of military families, they may have PCS'd and those letters may not have found their way to them.
Yep.
So I think that's really important to share. Thank you.
Yeah.
Sorry, Josh.
And I'll say when I was doing mine, it was a little confusing at first, but then once I got to that point in the software, it was very simple. It was very straightforward. But then they asked me a question, it was like, did you receive this? And I kept the child stimulus ones, but I didn't do a good job keeping the other ones. And so really what I had to do is we actually had to go back through all of our checking account and look at the different deposits from the IRS Treasury. And okay, I got it on this day, got it on this day, because they say you should have received about this time. And sure enough, I did, right? And so I kept good records on one side. I didn't keep good records on the other, but I went back through in my checking account and looked, and sure enough, they had been deposited. I had the dates, so I knew exactly how to answer that question. So,
And if you filed, you do your best job to file this year, and you, for some reason you missed it, you can always file an not an extension, but it's 1040X. Amended return. Yeah. So you can file an amended return.
I'm writing this down in the chat here. 1040X, like X-ray.
And I'm trying to remember if it's 1040X for extension or for amended. I'll have to.
1040X, 1040-X, amended U.S. individual income tax return.
Thank you so much. I know I'm going to have to do that because we don't have our corrected W-2 yet from the U.S. government. So that happens.
Yeah, there's my father-in-law, who passed away 2 years ago, was retired Air Force, and so I was telling Josh about this. I think we went back and forth with DFAS on his military pay, and so how to record that. And finally, that we just said, well, just make it payable to my wife said, make it payable to me. And so we had this $15 1099-R, what to do with. And again, we spent all this time in the world, but we just did the best we could, took notes, and hopefully, everything's all right.
So earned income tax expansion, what is that?
Oh, so that was my point. So the earned income tax credit. So if you look at that program, it's essentially a way to help historically it's been to help lower income tax filers financially. But I said expansion because the program is really expanded in terms of the income limits. So you could make more money and still be eligible. You can actually not have children. It used to be, I think you had to have children to be able to qualify for it. So now you can not have children and qualify for the income tax credit. And it's especially appropriate in this particular venue of this discussion, because one of the things Josh talked about was the non-taxable combat pay. And one of the opportunities there, and another reason why you may seek help and look at different scenarios, is that with that non-taxable combat pay, you can actually have it included as income in the calculation of the earned income tax credit or not. And doing so or not doing so could have an impact of whether you're eligible or how much you're eligible for. So I just wanted to point that out as a potential opportunity for military families.
Thank you for sharing that.
I know that was exciting, wasn't it? That's good stuff.
Yeah, well, it might be exciting. If there's
exactly.
something you weren't able to get before. The other thing that you have on this list, and I think we touched on this a little bit, but transition and taxes. So you're talking about transitioning out of service, correct?
Yeah, and I think that was kind of what I tried to do with answering Evelyn's question is as you transition, understand that your taxes are different on the civilian side, so you need to make more, but also understanding that cost of living adjustment based off of location, because all your paycheck becomes taxable, where in the military it's not, because BAH and BAS aren't. And depending on where you are, that can be up to 50% of your income is not even taxable. So just understanding those so that it comes into your decision making when you transition out of the military, either after one tour or you retire after a 20 or 30-year career.
The other
one thing on that is, I was going to say, Josh, when you talked about checking the taxes, is with the new limitation on what we call sales in state and local taxes being, with property taxes being $10,000. So, a lot of states, a lot of states where the property taxes are very high. Now with this higher standard deduction, a lot of people aren't taking advantage. They're not itemizing to do that. And so but it's where people are doing that. I think you can check also in the state taxes to see for military, retired military, what type of benefits they have as far as, property taxes, especially for disabled veterans. A lot of that can go away basically. So that's really important in a state like Texas, where property taxes are a big bite.
Yeah, I just put it in the chat there. I mean, so we talked about I think it was 8 the states where they don't have an income tax, but some states, well, actually they may have an income tax, but they'll exclude military retirement from that. So that's another thing that would go into Josh's calculus, or your calculus, as you look at retirement, if you're retiring from the military.
And then we've got folks that may not be retiring and they're just finishing their tour of duty, right? So those are 2 different things, but I believe that there's transition classes available for wherever you are in your military career, and take advantage of all those things so you can prepare yourself for the next step. And the last bullet, we're almost to the end here, looking ahead to 2022. So what are you hearing about? What should people be doing to finish out the rest of this year?
Well,
so I would go ahead, Robert. No, you go ahead.
No, I was just going to say, Julie, some of the good news is that is I guess if you can call it that, is a lot of the everything that's tax related is usually subject to cost of living adjustments. So they're constantly adjusting tax brackets, so people aren't because you have inflation creep. You make more income due to inflation. All of a sudden you jump into a higher tax bracket. So tax brackets are, increasing for all statuses for next year. The employer contribution limits are increasing. So what you can put into, an employer sponsored plan or TSA, traditional IRAs, or, Roth IRAs. The restrictions, the income limits that keep people out of maybe contributing to a Roth IRA. That's rising as well. And then the standard deduction for everybody is going up. And that's just becoming such a standard, I guess, for everybody, because it's remarkably high, So I think for this year, it's up to 12,950 for single is 12,950. Married filing jointly is 25,900. And if you're 65 or older or have some other impairments, that goes up to 28,700 as far as the standard deduction. And then, there's still no limit on itemized deductions, but as I mentioned, you're limited under the state and local taxes to that $10,000 number. So a lot of people, it's really hard to hit that, to get beyond, or for your standard deduction to be less advantageous than itemizing.
I remember that when that flipped a couple of years ago. We own our own home, and even with the mortgage interest, we still were taking the standard deduction. So I definitely noticed that change. So I have a question. So like, let's say you're either having a baby in the year, anytime in 2022, or you have a child who might be turning 18 during the year. Do you get to take that credit for the whole year, or is that prorated?
So I know for the baby, right, had that baby December 31st at 11:59 p.m., right? Because if you have them for that year, you get to take a credit, but you don't have to pay for them. Don't do like my nephew who was born on January 2nd, right? So you got to pay for them and you don't get the credit, right? So December 31st, 11:59 is when you want to have that baby.
Yeah, I think, Julie, most of the IRS rules regarding, like status, marital status, child, anything birth related or event date related is anytime during the year, the taxable year.
So if you have someone who's a dependent who's turning 18, then you would still get to claim them for the whole calendar year?
I think in that case, it might be the opposite.
Opposite, of course. Okay, all right. Not yeah. I have a child who will be turning 18 in October. So so you get the benefit when they're born, but they take it back when okay, so that's it balances out is what you're saying. Okay.
Well, it's just like on the IRS when you're doing your tax. Another little tip is, you can round up. You don't have to or round down. You don't have to put in cents in your tax return. But they probably have figured out they make some extra money by that. I don't know.
I've long forgotten about the benefits that we got when the child was born now when we're talking about this year. So anyway, it's just kind of a tongue-in-cheek thing. But yeah, but see, this just talks about our military spouse community, that we really, expand this huge gamut. We've got 18-year-olds up to 65 plus that are part of our community. So living all over the world. So I think we pretty much covered everything that we had wanted to cover, and we're just 2 minutes over. So if you guys have any parting thoughts, I'll share one thing, but I'm going to let you guys go ahead.
My parting thought would just be, hey, remember, I guess the key thing is if this seemed like a lot coming at you, there is help out there. There are resources out there, and take advantage of those. And on behalf of everyone here at USAA, all of us for sure, just thank you for all you do for the community.
Yeah, thank you very much.
Both MilSpouseFest and everybody who's watching this.
That's right.
Yeah, I would say that I mentioned, the importance of writing that little letter. I know when you finish your taxes, the last thing you want to do is spend more time and just write down your thoughts. But I found that so invaluable, just to be able to go back, and the first thing I look at when I do my taxes the following year is, that letter to myself. But the other thing is, if you get a refund, what to do with it. And always, as financial planners, we're always like, oh, invest it, pay off debt, do this and that. But gosh, it's been a tough couple of years for a lot of people, and go have some fun. I mean, go have an experience, take your kids to wherever, just have an experience. You guys really deserve it. And so, have some fun with that money.
I think that's a great tip. My my last comment is twofold, and hopefully my team can help me out here in the chat. We are, JJ and I and some other experts, going to be back with you on April 7th for Military Saves Month. So for you financial planners, you're probably really happy that we're doing that content. And if you are just finding your way to MilSpouseFest and you're not really sure about what we all have to offer, our virtual folks, you can register. When you register for that tax tip, not tax tips, that's what we're doing today, our Military Saves Month webinar in April, you'll also see the option to register for our Unite and Ignite in-person event. And we have one of those days is hybrid. So our first ever hybrid event will be on April 28th at 9:30 a.m. Eastern time. And so I'm inviting everyone here to register for that. So you'll be able to participate virtually with our in-person group. So we're really excited to bring that to the community. So thank you all so much, and we look forward to talking with you again.